traders, welcome to Charts and Coffee. Happy Wednesday, everybody. Hope everyone is having a good morning. This is FOMC Wednesday, so not our garden variety Wednesday. That means at 2 p.m. Eastern, we're going to get the rate statement and the decision on rates. It is widely anticipated, and this is based on the data. You can see here it's widely anticipated. We can get down to the percentage right now at 9:01 a.m., 98.8% probability of a quarter point rate cut. Now, why does this matter? One time someone asked, Rob, does the Federal Reserve actually look at the Fed fund futures? Oh, absolutely. This is really an interesting two-way communication device. If the Federal Reserve sees that we collectively, traders and investors, are moving this in such a way that it's out of sync with what they're going to do, they will systematically, with just words, messaging, talk this down. It doesn't take much to talk these probabilities down. They can talk about headwinds. They can talk about difficulties. They can talk about inflation and all these little cues and clues to tell us that, we're not going to cut, or we're not going to hold, or we're not going to hike, whatever this is. So they know what we're thinking. And as long as they don't change this, we've got a pretty good idea that we're all on the same page. So the day of, frankly, 5 hours from now, we're telling them, hey, it's almost 100%. You better cut. Otherwise, we're out of sync. And you might say, could it really be that easy? Yeah, it really is, because we have proof of this, right? Proof matters. I did a video on Friday called Proofs in the Pudding. I was showing you all the current open trades, what I'm in and why. By the way, yesterday, if you want a little bit more of a deep dive on this topic, the target rate probabilities, how I watch these, and then what I'm looking to trade, check out yesterday's video. This is the swing trading windows. I know, not a tantalizing title. Probably could have thought of something more clever, but it's really what I'm trying to tell you. There are 2 swing trading windows this week. One of them is today, and you can see the timing and what I'm thinking if you check out that video over at the Simpler Trading YouTube channel. All right, back to this here. So yeah, Jerome Powell back in Q4 of 2018, it decided to ignore this. He decided to hike when it was largely discounted, expected that there was going to be a hold, right? So instead he hiked. And you might think, well, how bad could that be? Think back to Q1 and even late Q4 of 2018 and early Q1 of 2019. Up until the pandemic sell-off, that was the swiftest sell-off that we've seen in indices. All right. So yes, it matters a lot. So keep an eye on that. And, that's something hopefully that will be really a go-to for the rest of your career when you're trying to determine how important is monetary policy. So let me put that in kind of order. When we have huge rallies in equities, this is how important it is. If we don't know monetary policy, we don't understand the anticipation for higher or lower rates. And higher or lower rates and what the Federal Reserve does, quite frankly, is the only macro that matters. Yes, we can go down a rabbit hole of nuanced discussions of 1,000 different metrics, but at the end of the day, and it's really difficult for a lot of economists and really sort of thinky traders and investors to accept what Jerome does and what, or whomever the chair is, and what the Federal Reserve believes to be true is the only thing that matters, right? That's it. They could correct themselves later on, but remember, what they see, what they believe is what's going to track to monetary policy. So this is not a lot of traders like to outthink and think they're smarter than Jerome. Who cares? Unless I'm Fed Chairman Raghee, right? It doesn't matter what I think. It only matters, do I have the pulse of what they're doing? And that macroeconomic decoder ring known as the Fed Fund Futures, big shout out to the CME for making this available and so easy to interpret. There's a lot here. I'm just showing you one of the basic things. When you hear about dot plots, that stuff's here too. So there's a lot of cool information here that you can look at. And rather than listening to some talking head on television that may or may not have their own skin in the game, you can make your own decision, right? Because as I tell my own traders in the mastery, nobody cares more about your money than you do, right? That's why you're here trying to get better at this game. And it is a game called trading. All right, so let's get to it. What do we got here? Is it going to be surprising to anybody that we're in kind of wait and see mode? Well, here's the other part of the drama that's about to unfold. Who says trading in the markets are boring? There is no sport on the planet that's more interesting than this one, as far as I'm concerned. All right. Although I will say the Panthers and the Oilers had an unbelievable Stanley Cup kind of revisit the other night, and it was a great. I don't know if anyone's caught that. So the Panthers and the Oilers were in the Cup last year, and they met for the first time this year the other night. Unbelievable match. So yeah, maybe hockey might be a close second. Anyway, if we're taking a look at where the drama may be, and this is what I want to warn everybody. Right now, the expectations are that the Federal Reserve won't cut in January. And if we're going to see that continued climb, remember, the market's always looking ahead. What's going to happen? Should we buy stocks today in anticipation of fill in the blank? In this case, rate cuts are going to continue to happen. If Jerome wants to keep the messaging clear about meeting to meeting to meeting cuts, and maybe he doesn't, when the presser happens, don't worry about December. That's a done deal. Stick a fork in it. It's done. We're getting a 1/4 point cut. At least, right? But we're getting a 1/4 point cut. There's no reason for them to cut a 1/2 point again. This is the one you've got to watch. This January 29, 425 to 450 column, because if we're going to get a cut, this is the column 400 to 425. That's got to start increasing in size. So now the drama pushes out to January. All right. So what would keep the S&P from moving higher? A lack of clarity going forward into the next meeting, right? Now, we don't just need the Federal Reserve to rally, but it sure does help. So the other thing to keep an eye on will be support around 6,100 on the S&P futures. By the way, gang, I look at the S&P futures to understand the S&P period. Yes, we can look at SPY, although I don't know anyone who looks at SPY to understand the futures. And sure, we can look at SPX. But here's the reason I will recommend watching the ES. And look, trade whatever you want. Trade the XSP, SPX, SPY, ES, MES, whatever version of the high concentration weighted S&P you want to trade, go for it, right? But here's why I like the S&P futures better. And take from it what you will. When I'm trading SPY or SPX, I'm looking at this. Same thing goes for QQQ and the NASDAQ. Same thing goes for IWM and the Russell futures. This and all those futures contracts that I just named trade 23 hours a day. So that means, take a look at this S&P. This thing has been moving and grooving since 6 p.m. yesterday. That means my indicators are cranking. My volume is already there. Levels are ready. It's not as if I've got the SPX or the SPY with that very thin pre-market, if at all. The bell rings at 9:30. All the attention rushes in. And then everything has a chance to start to calculate. Indicators, price action, volume, volatility, right? Whatever it is. So by using something that's already got a running start, if you want to think about it that way, at 9:30, everything that I'm looking at has already warmed up. The engine's warm. It's been running. Everything's moving and grooving. Rather than at 9:30, everything starts to freshly calculate. The S&P futures are going to pretty much dictate what the SPX and the SPY does. It's just a matter of different price levels, right? So yeah, if you want to look at the SPX support at 60.28, dollars to donuts, I'd bet dollars to donuts, right? That we're going to see support roughly around 61.12. You're going to see there's a certain amount of, coordination. I won't even say correlation, coordination between these, right? But one is trading 23 hours. The other one's trading 9:30 to 4. So those are things to keep in mind. All right. So as always, gang, if you have any questions, feel free to type them in. And first up is good morning. John asks, can I get one-on-one training? John, I don't train one-on-one. I haven't in quite a few years. What I do is, and this is, I will say it's probably a little bit better. What we do is we have a community. You probably know. If you don't, I have a community over at the Sector Secrets Mastery. We're 5 days a week, Monday through Friday during those trading hours. I am there basically side by side. You're in my office, right? This welcome to my office, by the way. You're in my office. I'm on the mic. I'm sharing the charts, and I send out the trades that I'm looking at. So not only can I show you what I'm trading, we have the then, because of the community, because of the ability to, share all this during live hours, I can trade. You can watch me trade. I can share all the nuances, and you've got a community there that if you miss something or you're on a different part of your learning curve, there's other folks that are probably there in that same boat with you, or even better, there's a few folks, maybe a couple rungs up the ladder of the process that can help you out. So I'm a big fan of that community type trading. I did one-on-one for many years. And what I always found is once I spent an hour or a month or whatever it was with that trader, now they were by themselves and they didn't have the support, or they didn't have that second set of eyes or a community to kind of pick them up when they had a rough day, or someone to share, hey, I see this. What do you all think? And that's a huge difference, because I've been on both sides of that. And consequently, what I have found works the best for traders to succeed is to have a room that they can. And by the way, I mean, not for nothing, John, it's a whole, not that this is even an issue for you or anyone, but it's a whole lot more affordable. Yeah, one-on-one is not something I would recommend. And you're going to get more bang for your buck if you check out what we're doing in the Sector Secrets Mastery. And thank you for the question. I appreciate it. All right. J Moss says, unironically, I think I choose Fed Raghee over J Powell. I don't want his job. Yeah, no, I like the one I've got. I don't know what his salary is, but I'm pretty sure mine is better. Although, he does know where things are going. Yeah, he does know where things are going. And Jay Powell's net worth is nothing to nothing to sneeze at, as they say. All right. I do not envy him his job. I really don't. I don't at all. All right. Next up, do I see any momentum in the stocks within TAN? All right, let's see where TAN is in the bigger picture of things that we may or may not want to take a look at. So I'm going to go put TAN on this list, and it is, where is it? There it is. So it's down 6% month to date. It's up almost 1% over the last 30 days. Right. Okay. And quarter to date, yeah, it's the weakest stock. So here's what I'd say about TAN. B. Jones, great question. Too soon. Right. Timing is trading. Right. Timing is trading. So if there is something that has been weak, you could throw the dumpster fire that has been healthcare into this group. Healthcare is at a brand new low for the year, almost for the year, almost. So what I would say is anytime you're looking at something weak at the end of the year, at the end of Q4, wait till Q1, because sector rotation where high-performing stocks will see profit taking while underperforming stocks, you'll see bargain hunting. That is a Q1 activity, not a Q4. In fact, I would anticipate names like TAN and even XLV will get weaker, very likely, or stay weak going into the end of year because of tax loss harvesting. So the idea is not a bad one. I think it's a little too soon. And it also depends on what your time frame is in terms of whether or not you're looking at a swing trade of maybe a month, or if you're looking to add this to a position portfolio of multiple years, that's going to matter a lot. Time frame, time horizon matter. In fact, when I see arguments on, say, Twitter, they're always not even disagreements. They're always a lack of whomever was putting out the idea, right? I like this stock. Well, on a 5-minute chart, on a daily chart, on a weekly chart, a monthly chart, what's the time frame? What's the time horizon? Is it a short-term trade? Is it a trend follow? Is it an investment? Whatever it is. And it's usually time frame and time horizon where most traders disagree on what to do next. So our job is to know what is that objective? Is this a very long-term hold or not? But in the meantime, because of the Q4 phenomena of performance chase, there's no performance here to chase, right? So I would say stocks like TAN, stocks within TAN, and TAN as a sector would be something I'd avoid until Q1. All right. All right. So next up is Oh, let's see. So momentum, um, ES. Do I not adjust for contract change? That's a continuous contract, John. So it automatically does. It'll roll. So most platforms, when you have a continuous contract, so let's say you're on TOS and you're using /ES, not /ESZ24 or /ESH25, right? H is March, 25 is 2025, Z is December 2024, right? Okay. So if you use a continuous contract, most platforms, and probably want to check with whomever your data is with, but most platforms will use that Chicago Mercantile Exchange roll date. I used to call it the pit date. It's basically when the week before expiration, which is day after tomorrow, the week before will go from December to March. So a continuous contract automatically takes care of that. All right, XLY. Yeah, so this is probably one of the best sectors out there. It's got Amazon in it. It's got Tesla in it. It's one of the best performing sectors of probably the last quarter. Right? The strength here is nothing new. It's really just continuing to be, all sorts of tall and awesome. The idea that a handful of stocks can take a sector with it is very true. Most of the high concentration weighted names in consumer discretionary are not in super strong uptrends. Two of them are, and they're the two heaviest weighted. Can Amazon and Tesla almost single-handedly take this sector up? Yes. Case in point, look at what Broadcom, ABGO, did to semiconductors, SMH. That is one name carrying, the entire sector higher. High concentration weighting absolutely applies. Buy the dip. We've got multiple positions in Amazon. We day traded Tesla via TSLL the other day. XLY is a great ETF to keep an eye on. The other question is there liquidity in XLY itself? Yes, if you can buy a dip and if you want to get some really good bang for your buck, in other words, can I buy XLY and on a dip as opposed to Amazon and Tesla? Yes. If you think about what you're getting with that one long call position or long shares, whatever you're doing, is you're getting exposure up to Amazon and Tesla. But the flip side is, why would maybe you want to go with Amazon or Tesla and Tesla instead of the ETF? Because most other high concentration weighted stocks within it, Home Depot, Booking, McDonald's, Lowe's, TJ Maxx, Starbucks, Nike, those are meh at best, right? Weak, like Lowe's and Starbucks at worst. So if you want to buy the best in the group, go with the individual stock. If you want to take advantage of the overall group starting to move higher together, better bang for your buck, go with the ETF. So this, I could say it's 6 of one, half dozen the other, because both Amazon and Tesla are moving higher. But again, if you're looking for overall movement, right? If you're looking for overall movement, I would say, and you want to just use a smaller number of dollars to get a bigger idea, right? That would be definitely XLY would be the way to go. All right, let's see. What else do we have here? Thoughts on WHR? There we go. If you look at WHR, overall uptrend by the dip. Now, here's two ways you can look at it. All right, this is the way I would look at this. 117 could be an interesting level because that'll be a little bit of support before WHR gets sucked into the vacuum of a potential gap close to about 112.80, 113. Okay, so that's one thing to keep in mind. Gaps are just support and resistance at the end of the day. The other thing we could look at, and I'm not sure that I would be much more aggressive if we have a mean reversion than about 113. So here are the two levels that I would look at. Either buy the support of say the open of the candle on the 9th, which is 117. Let's call it 117.80. That would be aggressive. And if that doesn't hold, I would put a stop in there, get out if we say take out the low of that candle, and then I'd probably look to build a position closer to 113. All right. Let's see what else we have here. Elliot, I'll tell you what, I am just going to avoid bonds. Yeah, and it's not that it's not an interesting narrative. I don't have a good clean setup. I think there's so much confusion. I know, like we shared, when I look at what happened with Fed Fund futures, the thing that I've got to just accept is there's so much confusion between now and January and going into March, and that will continue to be something that probably weighs bonds down. I look at bonds and I think of all the things that I could trade, of all the different structure and of all the different trends that I have on hand. I just find right now my life is complete. And I just don't feel I'm missing anything with bonds. So it's not a matter of whether there's something to do or not. When I look at the list of what I'm doing, bonds is just so far down the list, the bond market. And, am I going to be bullish? Am I going to be bearish? I think right now I don't have an edge. So I just leave that one alone. So thank you for the question. A lot of folks are curious about bonds. I too, what happens next with them? Do not know. But I will say, keep an eye on the 115 handle from a bigger picture perspective. Interesting support on the weekly chart. All right, gang, I've run over. Let me go ahead and wrap it up here. I'll be over in the mastery in just a moment. If you want to check out what we're doing, the kind of trades that I'm putting on, I share them with our members every single day, Monday through Friday. All right. So if you're looking for a community, if you're looking for some support, if you're struggling with your discipline, if you're struggling with what to trade, that's exactly what we address every day. All right, gang, be good to each other. I'll see you tomorrow.